So we have a short short video for the week, and going forward from now, we want to make videos as short as possible. So let's go straight to the point. Haven't seen the structure of SAUSD. I've looked on multiple time frame on 4 hours on daily, but let's first of all look at the structure on daily to see what price has done by the daily, and on daily time frame, you will see that. There is a very strong push in price, and the daily candle have really swung into action and broke multiple structure. And we are seeing here from the bottom an inverted head and shoulder. You can see that this is the left shoulder, this is the head, and this is the right shoulder. And we have seen price reversed after doing that, forming that price action on a daily time frame. And gold has reversed and is moving up. And the question now is to what extent? Now, nobody can actually tell what the price wants to do, but on daily time frame, I point out one thing. I haven't looked at the structure on daily, indicating that there is a possibility for another daily embrace. So, what that means on a daily time frame is that ignoring those multiple weeks we have seen that SAU could return here on a daily to react. So, a return into that zone will be a break of the previous high, seeing the yellow metal um, approaching, actually approaching the current all-time high around the 3441. So we are bracing up for 3441 on a weekly rejection. But before we do that, price has to break out from the current descending trend line, which we have on our 3 hours, right? So this is where we are likely going to come. And we are doing so based on the fact that he has demonstrated as a resistance structure to upswing on a daily close. These are daily close resistance become support on breaker structure. And we have another one here, another ROS. And technically, if price breaks out from here, this is where price should come. So let me state it this way. So it's coming here to this daily structure around 3442. So here becomes your new supply roof. And on daily time frame, of course, we have a couple of demand structures too, but I don't like to. Let's play safe. Let's play safe, and let's go back to the 4 hours. I'm okay with that structure. I've already gotten the next sell roof, so I'm okay with where price is at that moment. So this is where it's coming to. Is where it's coming to. It's coming here. It's coming to this area. This is your new supply zone. So if price breaks out from here, then here you sell from here. You're going to sell here. It makes a whole lot of sense to sell from this. Even if you sell here, it's a break of the previous high, right? The previous high was around 27, 28. So if we get here, it's around 40 something. So it makes a whole lot of sense to see price coming to that zone. And the current all-time high retest is still on the desk. So, but this is what we'll have on 4 hours. So let's go back to our chart and see if there is a clear reflection in what market has done. And if you look at the structures, the trend lines didn't really touch with the close of the candles on 4 hours time frame. But there is a trick to this. That is multiple time frame analysis. This is where the multiple time frame analysis and the different broker candle representation comes in. Please, my people, if you want to trade, especially gold, you need to chart minimum of 10 brokers. This is a trade secret. You need to chart 10 brokers. And when you chart 10 brokers, you need to display the 10 charts on one page and monitor the candle close differences. You are going to find a whole lot of divergence. The divergence you will see is huge. And each of them will either represent your success or your failure in trading. Each of them will represent either your win or your loss in trading. If you align 5 brokers on 3 hours time frame and chart them, the candle close are different. They have different candle closes. On different candle close on 3 hours, different candle close on 4 hours. That matters a lot if you're a structural trader, except you're not trading structure of market. So let's go to 3 hours. And when you come back to 3 hours, you see we now have very clean closes. But when we go back to 4 hours, we are seeing space. Especially if you look here now, you will see a space, you will see a space, you will see a space. All these are false representation that can make you lose trade. But when you scale down to 3 hours, you see that those spaces are filled up, now giving you the ability to draw a beautiful trend line. But if you go back to 4 hours and you want to follow 4 hours, you are going to make a whole lot of mistake. When you draw this thing on 4 hours, you find out that on 3 hours you are invalidating, cutting the head of a candle close. You don't need to do that. You don't need to do that. You are looking for space. You're looking for crosses. You're looking for a beautiful cross. You want to cross without cutting the head of the candle. You can cut the wick, but you are trying to avoid cutting the head of the candle. If you don't cut the head of the candle, if you go back to that time frame, especially 3 hours and 4 hours, which is our preferred litmus gauge, you will see that the head or the close of the candles are intact while we are just cutting only the wicks. So you come here to 3 hours, let's come back. You can see the ROS, you see here break of structure, come back here, retest. This makes here an ascending trend line. This is undisputed. Nobody can dispute this structure. Nobody can dispute this anywhere in the world, even if you are the first person that started trading, even if you are the first, even if you are Fibonacci yourself. This is a break of structure here. A supply roof, or you can call, let me call it the right word. I like to use that word supply roof. I don't like too much grammar, and I don't like it. So this is a supply roof on 3 hours, right? And we have a break of structure and price returns here on demand floor. This is demand floor, right? And you see price have retested it, retest one, retest two. That was why I put RT. RT is retest candle after break of structure. Market always come for retest, especially in a trending market, either downtrend or uptrend. And you have seen that retest and the subsequent candle become support, become resistance, meaning that if this structure is broken, it will call for retest. And look at what happened. The structure was broken. Did it call for retest or not? It came and retested it. Retested one, retested two. So let's be very specific on all the reactions. And price came again, retested it again. Now, it breaks the structure, came back and retested it. It breaks it again and came here again and retested it, making here a psychological ascending trend line. And we broke that structure on Friday. Now, on technical, I expect price to come back and retest that structure and continue to buy. That is what I expect on technical. But because of liquidity concern, the market may need liquidity for optics. So what this means is that if you wait here at 3,350, the market will put a buy. But the market might decide and come down into 3,341, take away 150 pip stop loss, and begin to buy. And you see the 4 hours candle reject. The 4 hours candle that dips in here, or the 3 hours candle. Now I'm using only 3 hours and 4 hours. I do not want to see a 3 hours candle close below this structure because our reference has been on 3 hours. Our reference has been on 3 hours since April 25. So if we're having a full month of reference on an ascending trend line, we are using it as a gauge. That does not mean the market cannot go otherwise. The market can go front and back. But at the moment, we are following orderliness. So what that means is that since we are banking on 3 hours, we do not want to see a 3 hours candle close below this. So what this means on technical, even if the market opens and a 3 hours candle dip itself into 3,339, we expect that before the close of that 3 hours candle, it should reject back. And if it rejects back and we see that that candle has successfully retested this broken ascending trend line, a previous supply roof, it will now use as a demand floor so that it can break this ascending trend line, connecting the current all-time high and an attempt to challenge the current all-time high. A break above there will bring price into 3,444. There are geopolitical tension. Israel and Palestine, they are in conflict. Russia and Ukraine, they have not resolved. They claim they have resolved, but they are still fighting from the back. There is a new sanction coming in on Euro. The Eurozone will receive another sanction from the United States. President Trump dropped a bomb. He dropped an information, a very strong tariff warning on which he did on Friday. So all these things are things that might be pushing gold as a safe haven asset, thereby making people to use gold as a hedge. So there's a probability that positions will be doubled. Central banks may want to double their position in order to clear this coast out so that gold need to trade around 3,600, 3,700. For scalpers to forget that gold is going to drop, the market has to move another 1,000 or 2,000 pip and create a new trading structure. So what I mean by this, any further push in price, anything that push price into 3,700, we create a new structure. Thereby, this place will be history. So that this market, this money, this asset will be secured. For this asset to be secured, the market has to move about 2,000, or let's say 1,500 pip. Then you know further is creating a new trading structure as the market continues to go up. So you don't think of market coming down here. Somebody bought this thing up to this place. For gold to be at this place, this is somebody's money. There is somebody who stockpile gold at this price. So do you expect him to close his eye and see his asset become nothing? So they will continue to push this thing until here becomes a low. For us now, this is a current high. But I believe before the close of 2025, this will be a low. If this becomes a low by close of 2025, then we are trading high. The high you see today will be a low tomorrow. If we are here at 3,880, this is a low. So it's more like somebody protecting his asset. And I see that happening because gold couldn't have come here without some institutional involvement, without some institutional liquidity. They have made that possible. And I believe they will not want to see a situation whereby they bought gold at 3,500 and tomorrow some scalpers believe that because you are a scalper, then gold should come to it should come to 2,800 and be trading and go below. No, it doesn't work like that. This is a store of value. Gold is a hedge in terms of geopolitical tension, in terms of political instability, in terms of war, in terms of inflation, is a gauge. And gold and silver has remained and retained that status as a safe haven asset. You know, though they are not yielding, but it doesn't mean it's fixed, yes, but yes. So even as sometimes you see it outperforming yield, at the moment, gold is performing the 10-year bond yield, and lately we have seen Bitcoin pick up. But I will tell you that pickup in Bitcoin will not live long. It will crash. It will crash. So this is what we'll have for SAU, and please feel free, give us a thumbs up, encourage us to continue to look at market every day, because the more we look at the market, the more we see things we are not seeing. If we look at this chart now, if I look at this chart now in the next 5 hours, what I will see now is different from what I'm seeing now. So the more we look into this, we are doing so because of the courage. So feel free, come online, let us know what you feel. If we have a divergent view, we'll look at it and incorporate it into what we are doing. Now let me see if we have other things from our expert advisors before we go. We try to maintain a minimal time in our chat, and we already exceeded our time due to too much talk. It's impossible to do chat without too much talk. The market is still bullish. It's bullish on daily, it's bullish on 4 hours, it's bullish on 3 hours. So all the indicators are below price. So what you are now looking for, you see what I said now? Do you see that indicator there? So there is a possibility. Let's see. Okay, that's my EMA. Can you see that EMA pointing at that level, which I already said, 3,399, 3,339? There's a possibility that price will dip itself there and reject back. But if we have a break and close below this structure, then you see this is an ascending 3 hours structure. It has held price in the past. As support becomes resistance becomes support on multiple times, and we have traced it to the end. So if price breaks and close it, then most likely I might be seeing that as a baby fake out. It's a baby fake out which will return into the structure and have the ability to break that ascending trend line and retest it again. And if it comes back here again to that long-term descending trend and connecting the current all-time high and an attempt to challenge the current all-time high at 3,442, then price might begin to break out from there. And if it begins to break out from there, we look at here as a potential floor where price also have a very strong price action and capable of holding price. So this is where I see, and you see the EMA also giving you a signal at this level. So if price falls, because trading is probability, anything can happen. It's probability. So if it falls out from there, the EMA is telling us that is a 3-hour EMA. The 200 EMA on 3 hours time frame is giving you an indication There is a demand here. And truly from our chart, we've seen it. When you look, you see here, you have here as a support floor, support floor, support floor, break of structure, retest one, retest two, break of structure, demand one, demand two, break of structure. If price comes back here, even after the breakout, there is a retest here. If you look here critically, you will see there's a retest. Look at the retest candle there. So let me point it out. You see there's a retest candle here after that breakout, but it came in a blue candle. So if price come back here, it's also valid to look for a buy opportunity where price can go to retest the broken ascending trend line. So if price come back here, it might use it as a foundation to go back and retest this broken ascending trend line and come back and continue to trade down. But we don't expect to see that. But one thing in trading is that you don't look one way. When you think forward, you think backwards. That is what makes you a trader. So for a trader with a chart, if you draw two lines up and down, anyone is correct. But what makes you a true trader is the ability to enforce in one direction and see it happen in that direction. And if that happens, that makes your credibility 100% accuracy or not. So this is what we what we have on technical, and we have applied our indicator, and it has our expert advisor has given us a clue. And when we pair it with SMA, we're also looking at SMA and the EMA, giving us a similar clue. So what we see here is now, before I even forget, there is a structure I have, and that will be my last structure. There is a structure we have at this level. Let's see if we get that clearly on 4 hours. I can't see it. I don't seem to see it. I'm looking for it. I cannot see it. Let's see if we see it on 3 hours. I can't see that structure. Yeah, I think it's from the broker. This broker is not having that structure. I used to have a structure somewhere around here from FX Open. If you go back and chart FX Open, you will find a structure around here. There is a structure around here in FS Open. That structure around here in FS Open is like this. It's something like this. But I can't find it here because there is a supporting structure here. There's a supporting structure here, but I can't find that from this broker. So you chart multiple brokers. If you chart multiple brokers, you will understand exactly what I mean. Yes, if you go back to FS Open, you will find a structure around here, but I can't find that here. So that is why you chart multiple brokers and have multiple splits. So on a particular screen, you need like a 5 different brokers of gold chart on different time frames, or you can stay on the same time frame but multiple brokers. What I mean is that, let's say you are charting this now gold now on Wanda. You have a Pepperstone, you have FS Open, you have a ICCOM. Arrange all of them all in one page and on the same time frame. So when you stay there on 3 hours on 4 hours, watch the candle closes, watch the 3 hours candle close, watch the 4 hours candle close. You are going to find a whole lot of difference. The difference is much. The way they play with candle, they manipulate candle closes. And if they manipulate candle, every candle in the market signifies something. A hanging man is different from an engulfing candle. They are not the same. So if a broker interprets a hanging man as an engulfing candle, is misleading. If we have a greystone doji, or we have a rising or a shooting star, they all mean different things for those who trade candlesticks. So you need a broker